Hey, it's Simon here with your video newsletter for Tuesday the 16th of April 2024. In yesterday's video I talked about how the S&P was right at a kind of a do or die level that needed to bounce from that level this week, or worse was in store. I also talked about how the Dow was potentially foreshadowing the trend destruction to come in things like the S&P and the Nasdaq. So go back and check out yesterday's video if you missed it. Jumping back to SPY, you can see what happened on Monday is couple of things. We took out support and we've taken out the 50-day moving average. Really and truly, this uptrend now is kind of in serious question. And it does look as though we're transitioning from a buy the dip to a sell the rip kind of market environment, at least for the next little while. If we look at the Nasdaq, check in with the Qs, very similar story. It's closed below support. It's taken out the 50-day. This looks like it's rolling over as well. Now, bear in mind the Nasdaq has all it's done is chop wood for the last 7 weeks, and it now looks as though we are resolving in a bearish fashion. The Dow, like I said yesterday, it was kind of leading the way. This trend structure is broken. We're kind of in a confirmed sell the rip environment there for the Dow. Now, there's another little indicator I want to draw your attention to here. That's this dotted white line. This is the anchored VWAP level from the first trading day of the year. VWAP just stands for volume weighted average price. And so what the anchored VWAP level tells you is the average price on the whole that market participants have paid for a symbol based on the anchor point. And in this case, the anchor point is the first trading day of the year, 2nd of January. Now, anchored VWAP can give you some insight into market psychology. When price is above anchored VWAP, it means that market participants on average are making money. They're in the money, and that puts you in a buy the dip sort of an environment, because people who are long are happy and people who aren't long want to get long. When price gets below the anchored VWAP level, it means market participants on average are underwater. They're losing money. And this can change market psychology towards the symbol, because all of a sudden people are thinking, man, if price can just get back up to my entry level, I'll be able to cut my position without realizing a loss. Oh yeah, anchoring bias absolutely enters the equation when people are making buy and sell decisions. But what can happen, especially if a symbol spends quite a bit of time below anchored VWAP, is that rallies get sold. And you can see the Dow is in that environment now. Dow is flat year to date. IWM, similar sort of story. It's taken out support. It's below anchored VWAP level. IWM is actually now at negative year to date. And if we head back to the Qs, guess what? It's right on top of its anchored VWAP level. That's what I got for you today, and I'll catch you tomorrow. Thank you.